Hello, everyone. This next exercise will be monitoring the economy. I say exercise. This isn't a lecture. We're going to go through and do an assignment, and I'm going to show you how to do this through D2L. So we'll get started. This exercise is very similar to what I have students do in my regular courses. One of the things I'm going to ask that you do is write down a bunch of information every Wednesday after 4 p.m. Now, I'm not going to check it until the end of the summer session. And at that point, how you're going to turn this in is as simple as taking a picture on your smartphone and then sending it to me or emailing it to me. So we'll go ahead and get started. You'll want to have D2L up. Hopefully you already do. And we're going to start off with going to content. And you'll notice a number of hyperlinks and other stuff here. Why don't you go to projects and other info. So the first sheet I would advise printing off is this econometric tracking sheet. And you're going to want to download it to print it off. And you should have two sheets that print off. Go ahead and download it. And that should come up. So I'll go ahead and print that off, which I've already done. Now from there, we're going to go back to content. We're going to go down to projects and other info. I'm already there. And the next piece of information I'd like you to pull up is the sources for econometric tracking sheet. And there are a bunch of hyperlinks in there that we're going to follow and we're going to use. So I'm going to download that. So I'm able to click on those hyperlinks. You may just want to open them up. I don't really care how you get there, just get there. All right. So every week we're going to keep track of all of this information. And it's very simple. We can get this on most of it on Yahoo Finance, and there's a couple other sources we're going to look at. First piece of information we're going to want to find is the Dow Jones Industrial Average. Now in the previous video I talked to you about what that is. So we're going to go ahead and go to Yahoo Finance. It should open up another tab. And we're going to pretend it is after 4 o'clock on a Wednesday when I'm taking this, even though it's not. You can clearly see it's not. So right now, displayed on this first screen is the S&P 500, the Dow Jones, and the NASDAQ. So I'm going to go ahead and pull up a different screen here to show you what I'm going to do. All right. I have here on another camera the sheet that I asked you to print off first. So all I'm going to do is, if you notice, I have Dow Jones Industrial Average. I'm just going to write this information down. So I'm going to write down 17,836.92. Now, because I'm doing this in the middle of the day, it's still changing. But after you do it, or excuse me, when you do it after 4 p.m., it won't change anymore. Okay. Next piece of information we need is the S&P 500. So I'm going to go ahead and write that down, 2091. And to be honest with you, I could care less if you put the decimals in there. Write that down. And the next piece of information we need is the NASDAQ composite. So 4904, we're going to write this down. Now if you notice on the screen, the Dow Jones trading for the day is actually down about 14 points. And what that means is if it's going down is yesterday, after it closed, and this morning when it opened, it's down about 14 points, 14.5 points. What we're looking for overall is either an upward trajectory or a downward trajectory in these. Now, a serious downward trajectory in the Dow Jones would be a drop of 235 points or 200 points, and you would see that negative right here. Similarly, when you see these, actually the markets are pretty flat today, meaning that they're not moving in any great swath or large direction. So again, we're looking at these and we want to see if these markets are going up or if they're going down, and if they're going down, by how much, and the severity of that. Now the next piece of information I need is the bond yield curve. So I'm going to go ahead and go to this sheet. We've done all these. Now, if you don't have those pop up on that initial Yahoo Finance screen, you can type in, these are called ticker symbols, and later on we'll get into what that is. You can type these in over here on Yahoo Finance under this quote lookup. And once you hit go, it should take you to the Dow Jones, the S&P 500, or the NASDAQ. I'm going to go ahead and do it for the first one just to show you. So I'm going to enter caret DJI, and caret is, I believe, shift. The shift and the 6. Sorry that took so long. So I'll go back to Yahoo Finance. I'm going to hit shift 6 for the caret symbol and the letters DJI. That'll give me the Dow Jones Industrial Average. I click on that. And here we have the Dow Jones Industrial Average. Now on this chart here, you can range it out to up to, I think it's 30 years. And I'm going to show a chart here that's 5 years. And that'll show where the Dow Jones has been. And, well, if you really wanted to, you could do some linear regression and trend analysis to see where it's headed to. We're going to go ahead, no, now we're not going to skip it. I apologize if my computer seems to be going really slow. It's not actually my computer, it's the software we use to capture, the screen capture software. And unfortunately, it takes a long time for stuff to load. All right, right here we have a 5-year trajectory or chart of where the Dow Jones has been. Now again, the Dow Jones is the 30 largest publicly traded stocks on the New York Stock Exchange. It's really not a great indicator, but especially for old school investors, they have a tendency to look at the Dow Jones Industrial Average. A much better indicator, leading economic indicator, would be to watch the S&P 500 or the Russell 1000 is another one. We're not going to get into that in here. And those are much more accurate predictors of where the stock markets are heading. All right, now the next piece of information we need is the bond yield curve. Now the bond yield curve, if it's headed in an upward trajectory, typically means the economy is doing pretty good. Things are healthy overall in the economy. We're either going to grow or we're going to expand by 3% or more every year. Really what we're looking for, though, is any time this bond yield curve becomes inverted. And we're looking right here for the U.S. Treasury bond yield curve. Now to keep track of this, I'm going to go ahead And all you have to do for the bond yield curve, all I'm looking for, is for you to draw the trajectory. Now, if you want to do this on an actual Word document, you just go up to one of the insert functions and draw a line. And that's all I'm looking for. Now, real quickly, we're looking for either an upward trajectory, a flat line, or a downward trajectory. If we have a trajectory that falls pretty much anywhere in here, and my guess is you're not going to see that during the summer session. But if you have a trajectory here that's going downward, this is an indicator that we could be headed into a recession. Now, if you remember from the other video, monitoring the economy, if this is headed in a downward trajectory, it usually suggests we're headed into a recession and the Federal Reserve Board will drop prevailing interest rates. Now, if they're getting ready to drop prevailing interest rates or they announce it, this trajectory is heading downward, you want to hold off borrowing any money. Conversely, if after the interest rates go down, you may want to pull out any deposit money you have in the bank because you're not going to earn a lot of interest on it or less than you would otherwise. So the next piece of information is actually that prime rate that the Federal Reserve sets. And we're going to go to bankrate.com. Open that up. And we see the Wall Street Journal prime rate is what we're looking for. Right down here, WSJ prime rate, and we're looking for this week, which is 3.5 or 3.50. So I'm going to go and write that down for the prime rate, 3.50. Now, the next piece of information we need is the average. You can see that in the bottom there, the average P&E of the S&P 500. Now, we can find that on a website called multiple.com. And this is kind of an interesting website because it follows a famous economist by the name of Robert Shiller. I believe he teaches at Princeton. And he is known for creating some of these metrics and numbers that investors are interested in. Now, the P&E of the S&P 500, if you remember from the other video, is the P&E is the reciprocal or the opposite of rate of return, or what we call an earnings yield. So the average P&E of the S&P 500 is around 15.59. For the rest of this class, to make life easier on you so you don't have to go to this website, go ahead and just enter 15.50 for all the remaining Wednesday nights after 4 p.m. So I'm going to go ahead and I'm going to go to the next box and just enter 15.5 because we know it's going to be around that. The average P&E of the S&P 500, this website has kept track of this from the 1880s. So even if the average, well, what am I trying to say here? The average P&E of the S&P 500 is not going to be shifted all in one day. That's why we can go ahead and just put 15.5 for all of these. Now, the next piece of information that will change is the forward P&E of the S&P 500. So I'm going to go back here. I'm going to go down to the forward P&E of the S&P 500, and that is at wallstreetjournal.com. Hit there, hit open hyperlink. All right, and this is what we're looking for, this page. Now I'm going to scroll down, and what we are concerned with, again, is the forward P&E of the S&P 500 And that's what we're going to find here. So I find S&P 500. Now we're going to go over to estimate. And we see 17.51. So I'm going to write that down. Now, here's what this means. When we look at the average P&E of the S&P 500 and we compare it to the forward P&E, the forward P&E is a forecast. And I believe if you look down here, this forecast is produced by Birani, I don't know what it is, and Associates. And this company, in other words, a bunch of economists and statisticians are forecasting what the S&P 500 will be in the next year. So how we read this as investors or wise money managers is if we see a forward P&E of the S&P 500 at 17.51, but the average is 15.5, this would suggest that the market's overvalued. And when we say overvalued, that means stock prices relative to those earnings are pretty high, especially when we consider the average. And that's how you determine if it's a good time to invest in the stock market or buy mutual funds, is by looking at these two numbers. Later on in the semester or later on in the session, we will get into this one more time and show you how to read this. But typically, the investors look at this and read it as such. Now, even though this is a real basic way of doing it, it's not totally accurate. The gentleman I was talking about before, Robert Shiller, came up with a metric called the CAPE index, and that is a much better tool to use to figure out if the stock market is overvalued. Now, what I will tell you is I have seen this number, the 17.51 or the forward P&E of the S&P 500, I have seen that up to 22 to 23 in the last 10 years. So 17.51, when we compare it to an average of 15.5 and a high of 20, would be a pretty good, this right now, May 26 of 2016, might be an okay time to invest in the stock market. Again, that's based on my own history. Now, if we were taking this sort of from an academic standpoint, we'd say the stock market is overvalued. And this is the fundamental principle, again, of investing. Now, the next two pieces of information we need are the 91-day T-bill, Treasury bill, and the 10-year Treasury note. If you want to Google those to get a better explanation of what they are, that's fine. For the purposes of this class, we're going to use these two numbers for something that's called the risk-free rate. And we use this in our formulas to determine whether or not we use it as a rate of return in a formula. So we'll just keep it at that. Again, I need the 91-day T-bill and the 10-year T-note. So I'm going to want to go to Yahoo Finance once again. Now, here you're going to have to enter in these ticker symbols. So the 91-day T-bill, you'll have to enter in $IRX. For the 10-year T-note, you're going to enter in $TNX. All right, so we're going to go over here. And again, the first one is symbol shift 6 on your keyboard, IRX. All right, and they're going to call it on Yahoo Finance the 13-week Treasury bill. Same thing, 91 days, 13 weeks. And once that pops up, the information we're looking for is right here in these black numbers. Okay, disregard any of this information in here. You're just looking at this. So I'm going to write down for the 13-week Treasury bill 0.275. 0.275. The next one we need is the 10-year T-note. Caret symbol or shift 6, TNX. And 10-year T-note. All right. And again, we're looking at the black numbers. It's 1.82. So I'm going to write down 1.82, and that's all we need to do. And again, this assignment, I'm asking you to complete it anytime Wednesday after 4 p.m. Okay, and you have all night long until probably about 7:30, the 6:30 or 7:30 a.m. the next morning. So again, every Wednesday night, I want you to keep track of those metrics. You'll get very fast at it. Now, again, the P&E of the S&P 500, that average, you can go ahead and write it in all the blanks on all of these because it's not going to change that much. So on and so forth. Thank you, and I look forward to seeing you in the next video.